Welcome to the Capital News. I am your host, Alex Karitis. Today is December 16th, 2019. Thank you so much for joining me. So, the title of today's podcast is Market Risks 20 for 2020. Earlier this year, when we started this podcast back in February, I believe it was 30 market risks for 2019. This is a list that is comprised from Deutsche Bank. They did the list of 30 for 2019. We might have to do another podcast to see how their risks unfolded throughout the entirety of this year, since we are winding down to the end of 2019, about to ring in the new year here very shortly. And they are also, again, Deutsche Bank is also putting together a new set of risks for 2020. But this time they cut it down to 20 instead of from 30. So we're going to make our way through some of these. It'll probably be over the course of 2 or 3 podcasts, depending on how much time we spend on each point. I don't want to dwell too deep on any one specific point, but there are some notable discussions to be had here in this list of 20 concerns for 2020. And it's going to sound very much like the Capital News, the very issues that we've been discussing throughout the entirety of 2019, and also some things that we have been predicting that are going to carry a lot of weight moving forward into 2020 as well. This list came out probably, I believe it was about a month ago, and I've been holding it in my back pocket in case there was a slow news day or just waiting until we wind down a little closer to 2020 because you never know what's going to transpire with these markets, given the fact that they are just so disjointed and decoupled from the underlying fundamental economic data that we continue to see on a daily or weekly basis that is either stagnating or deteriorating. Sometimes it depends on the figure. Sometimes you get a little bit of an uptick, but we are pretty much still flatlining because one data point does not make a trend. So we're going to continue to watch this. I do believe the Cass Freight Index will be coming out this week. If history is any guide, it usually comes out second or third week of the following month. So we will have, hopefully, November's figures here this week, and we'll do a podcast on that unless there is some breaking news. Of course, we're likely to see Donald Trump, the 45th President of the United States, is most likely going to be impeached this week in the House when it goes to a full vote, and all expectation is that the President will be acquitted in the Senate because it is controlled by the Republican Party. Now, of course, anything could happen. There could be some shock witness that comes out, and who knows, it could be in either direction. Obviously, depending on your political slant, because I know most people are already siloed into what they think, regardless of the facts of the case, which are not good for the president. But he's been able to hold out. He's been able to keep the real integral players, his inner circle of inner circles, from testifying. So he's been able to keep everything close to the vest, and now he is working, and his lawyers in the White House are working very closely with Senate Majority Leader in the Senate, Mitch McConnell, on how to proceed with the trial, which I think is ridiculous. Now, of course, if you're siloed in with your respective parties here on the Republican side, you probably don't see anything wrong with this. You should, because I am sure you would be screaming at the top of your lungs had this been Hillary Clinton and a Democrat-controlled Senate working hand in hand with how a trial would move forward. I don't care what happened in the past. I care about truth and justice, as should you. Shouldn't make a difference if it's Republican or Democrat and who controls the Senate or who controls the House. Okay? So I don't like the fact that Mitch McConnell is working very closely and admits it. He admits it. He comes out and he flaunts it, that he is working very closely with the White House. And of course, people say the same thing on Twitter. It compels me to make a statement because the hypocrisy disgusts me. This is part of the problem. Okay? I am sick of people being so siloed in, making decisions before the facts are released. It's just what you want to hear. And again, if this is your mindset, you can disagree with me till you're blue in the face. That's perfectly fine. But I believe you are a part of the problem, not a part of the solution, because this country is much too divided, and people make decisions before they even hear the facts of the case. So that is what it is, but the president is likely to be impeached in the House this week, and then whatever transpires in the Senate, that trial, again, most likely President Trump will be acquitted. He will remain as president, and we will continue with a lot of the shenanigans that we have grown accustomed to. So, the markets today rallied, making all new time highs. So we might be in the midst of a Santa Claus rally. Of course, the Federal Reserve and the federal government and the White House are throwing everything and the kitchen sink at this market. Recall last week we said how ridiculous it was going to be that the Federal Reserve, over the next 2 weeks, and maybe 3 weeks, I mean, who the hell knows what these people are going to do, but at least over the next 2.5 weeks, they're going to throw $500 billion, yes, you hear me correctly, $500 billion in liquidity into these markets just to stabilize them, of course, because there's nothing wrong. I mean, no, there couldn't be. We just throw $500 billion at the markets every time when it gets close to Christmas. It's just a Christmas gift, that's all. $500 billion printed out of thin air. That's okay. This is just what we do. And of course, we do this when we're experiencing the greatest economy ever in the history of the United States. Okay, if you want to believe this, you need your head examined. But this is what is actually taking place, okay? Minus the greatest economy ever in the history of the United States, because we're not even close. But I digress. So $500 billion from now until the end of the year, maybe the first week of January, I'm sure it will be, and I'm sure it'll go further than that, in liquidity from the Federal Reserve, just to keep everything okay. I don't get it, but that's what they're doing. It is a crime. It is a fraud. I am waiting probably another week or two, and I will do that capital economics presentation that I told you about. I just want to wait and see how far they go with this. That's all I'm waiting for. I just want to see, because I have it in my mind how far they're going to take it, but I just want to see if I'm right. It makes no difference whether I am or not. You're going to see how disgusting the graph is, how it's a one-to-one relationship between how much debt and liquidity is thrown into the system versus how the stock market has performed. So there is no growth. There is no earnings expansion. There isn't, because they're not making this kind of money to justify these types of valuations. We have a market cap, a stock market cap to GDP at about 150%. It has not been this high since the dot-com era, right before its crash, its downfall, which, if you recall, and I talk about this here all the time, with respect to NASDAQ, it dropped 80% over a 2-year period, losing the majority of that very, very quickly. So if you think this is a good time to jump on board this Santa rally, which we may be in the midst of, good luck to you. Good luck to you, but you better be careful. It may continue. It may continue well into next year as well, because I don't think the Federal Reserve is going to take their foot off the pedal anytime soon. It is pedal to the metal through the end of this year and most likely through at least probably the first quarter of next year, and that's going to be contingent on some data, although I have my beliefs that it's really not going to make any difference what data comes out. The Federal Reserve is just going to continue with this. They're not going to call it quantitative easing. They're going to say things are under control, but they just have to do it to get some kinks out, this, that, or the other. They're going to continue to make things up. They're going to continue to lie, because this is what they do. And Donald Trump and company are going to continue to talk about the trade deal, phase 1 being complete. It's going to be signed, this, that, or the other. Some good progress on the USMCA, NAFTA 2.0. Some people are for it, some people are against it, whatever. Makes no difference. It's going to be touted as, well, I don't know, actually, which deal is going to be greater. If it's going to be the USMCA or if it's going to be phase 1. I don't know which one's going to be the best. The president is probably going to say they're both the best, so you judge. But we'll see what happens. At least we have the USMCA in writing. Phase 1 trade deal, there's nothing. There's nothing. They might sign the back of a napkin for all I know, but time will tell. And, because remember, folks, we were told that there was a phase 1 deal done 2 months ago. Okay, don't forget this. Phase 1 was done before. It was done in October. There was supposed to be the signing ceremony down in Chile. Remember that? The protests, all the global protests, some of that taking place in Chile. We can't have this. No, we can't have this type of economic summit down here in Chile. Can't do it. Everything's canceled. As far as I know, Air Force One is still working, and I imagine President Xi, President of China, his airplane, I'm sure, is working as well. So what prevented Donnie Boy and President Xi from getting together to sign it somewhere else is beyond me, except for the fact that we were lied to and there was no phase 1 deal, which is making me skeptical that we have a phase 1 deal now, too. because there was no way Donny Boy was going to allow the stock market to sell off. At least that was our prediction. Of course, it could have happened if he had a big short position on. But we said, well, it's more likely that he's going to, quote unquote, play it safe because he doesn't want his precious stock market to take a dive. And of course, he claims he doesn't pay attention to it, although he was tweeting about it again today because there was new all-time highs. But you're not supposed to know that. He doesn't pay attention to this. Have that as what you want. No trade deal. I'm skeptical that we have one now. I hope we have something. I hope there is progress of some sort, but we've been lied to so many times it's very difficult to know when, because we were told the same exact thing 2 months ago that there was one done. We were just waiting for a signing ceremony. And that was in October. The signing ceremony was supposed to take place in November, so a 1 month lag. Okay, get everything coordinated. Get all the, I's dotted, T's crossed, all that jazz. Okay, then you meet, you sign, hooray, hurrah. Didn't happen. Now we're told there's a trade deal. Phase 1. Fantastic. It's the best thing ever. Just like we were told 2 months ago. There's going to be a signing ceremony. This is December. It's supposed to take place next month. Again, same exact story. Will there be a signing ceremony? Time will tell. Time will tell. You have Donald Trump already talking about phase 2 a little bit. You have Larry Kudlow coming out and saying, oh, we're not going to talk about phase 2. We got to make sure that they're following through on phase 1. That's what I said, Larry, but guess what, Larry? You're a yes man, and if Donald Trump comes out and says we're going to start talking about phase 2 and jerking everybody around with that too, that's what we're going to do, and guess who's going to fall in line? Yes man, Larry Kudlow. He will fall in line. They will start talking about phase 2. I'm surprised we haven't seen a lot of tweets on that yet, but I'm sure they'll be coming. I wish it wasn't true, folks. I'm hoping it doesn't happen, but it most likely will, because anything that can jerk these markets around and jerk the public around to saying that something's coming seems to work. It seems to work. And so why the president has no incentive to stop this. He has none whatsoever, because the machines that do most of the trading, they don't care. They don't give a damn. They're going to do what they want to do. They're going to scour the websites, the internet for for headlines that look positive. That's going to be something that comes out there, sounds positive, that there's a phase 2 trade deal or things are getting closer and closer and closer. Nothing ever happens. But the machines are in control, and this is what we have. So we have the White House, the president himself, jerking everybody around. We have the Federal Reserve printing hundreds of billions of dollars, in addition to the hundreds of billions of dollars they've been printing. Now they're going to go into hyperdrive over the next 2 weeks to get this thing from collapsing, I suppose. But of course, it's probably going to have a stronger effect than that, and it will continue to rally. I'm sure we'll continue to see all-time highs between now and the end of the year with all of this extra funny money being thrown at the system. But time will tell. And we're just going to have to go from there, folks. And we're going to get to the list here in a minute. But before I do that, I just want to throw some other risks out there that are not on this list, because there was some news, and we've been discussing this. Again, I do believe we're ahead of the curve here on the Capital News with respect to a lot of issues. And we said that there was something probably bigger lurking when it came to Boeing. We've done a few podcasts on Boeing because of the plane crashes that unfortunately happened and the subsequent investigations and trouble that has been brewing within Boeing. Last week, there was a former manager. I don't know if you would technically call this gentleman a whistleblower, but definitely somebody who had serious concerns with what was going on with the production of Boeing airliners, in particular the 737, which is the airline in question, basically saying that upper management was more concerned with production than they were with safety. You had employees working very long hours, and of course mistakes can happen. Okay, we're people, we're human beings, right? Mistakes are going to happen, but you don't want to put people in a situation where they're going to make mistakes where the effect can quite literally be the death of other people. This is a serious industry, and I said, I hope this isn't the case, but here you have this gentleman coming out testifying under oath before a congressional committee saying that this was pretty much what was going on. Again, upper management rushing and putting profits ahead of safety. Again, folks, we had this conversation last week, and we've had it multiple times before, but this is the problem with so much that's going on, not only in this country, but around the world. It's profits at any cost. There's no allegiance to the United States of America or any country. We want 1.4 billion Chinese into, whatever our product might be. We don't care what the Chinese Communist Party is doing. We don't care what anybody's doing. We just want to make the money. We just want to sell product. We just want to offer services. It makes no difference. There's no moral clarity. There's no judgment. And that's a sad state of affairs as far as I'm concerned. But it is what it is. That's the world we live in. And Boeing apparently was no exception to this. But now they are halting production of the 737. And, of course, they say this is temporary. This is temporary, just like the Federal Reserve likes to tell us that the repo market and their intervention has been temporary. It's been anything but temporary. So is Boeing, is their production halt, is that going to truly be temporary, or is this just what they're saying? Because Boeing told us not too long ago that they expected to be up and running again and getting actual 737 MAX airlines back in the air by the end of this year. And I said, oh, no, I don't think so. I don't think so. Of course, the markets didn't care. The markets loved it. They rallied. Of course, they've come back down to earth a little bit. But we're going to see what transpires with this, because if this proves to really be an engineering mistake as opposed to simply a software glitch, if this was a software glitch, one would think by now they would have had this thing fixed. And then you have to do your training program. You got to get your pilots trained up. Okay, that's going to take some time. But I'm telling you, people, I just have a feeling that this is something more structural. And if it's something more structural, then those planes can't go back into the air. And then we're going to go right back to that podcast where I said, look, if that is the case, that this is something more than just a software glitch, that Boeing is going to be sued. They're going to be sued. I know Southwest Airlines uses 737s exclusively, and a couple other major airlines are also purchasers of the 737 MAX airline, and they have been grounded for months. And my prediction was, if assuming again that this was not a structural issue and just something that was software related and training related, that these planes might get clearance to be back in the air in the second quarter of 2020. Now, Boeing was saying we might be up in the air in the fourth quarter of 2019. I said, I don't think so, because you got Congress involved with all of this stuff too. And I said, Congress doesn't do anything quickly. So at least you're talking about the first quarter of 2020. And I said probably second quarter, if that. So we're going to have to wait and see what happens here. And again, if it's temporary, if it is not temporary, you're going to have thousands and thousands of jobs directly affected by this at Boeing specifically, and then all of the ancillary and supply chain vendors and companies that exist along the line. So this can be a hit to the U.S. manufacturing base if this proves to be more than temporary. I hope it's temporary. I really do. I hope this is not a structural issue. I hope this is just a software glitch, and then they fix it, and then they can get all of these pilots trained up to speed, and then all set for takeoff. But lives are literally in the balance. They cannot rush this, despite that they wanted to. You could tell they wanted to, because they were trying to get ahead of this story. And every time Boeing tries to get ahead of the story, they end up getting screwed, because somebody comes out with a report, there's a whistleblower, somebody goes and testifies, and then, they can't do it. So that's another tell to me that Boeing knows something's up. And they're just trying to put as much positive spin on this as possible, which I think is only going to end up hurting them in the long run, especially if this is something that proves to be structural. Okay, now we might continue to see a slowdown in autos, which is going to be on our list. We're going to get to that. But don't forget also, folks, because we did a couple podcasts on this a few months ago, and that is in regards to GE General Electric. Remember that analysis where you had forensic accountant Harry Markopolos come out? This is the guy who outed Bernie Madoff with the Ponzi scheme back in the great financial crisis. His team had their eyes set on General Electric. They issued their report, turned it in to the, who was it? I think the SEC and maybe even the FBI as well, pretty much going after GE for accounting fraud. Now, he warned us, again, Harry Markopolos, forensic accountant, he warned us that if history is any guide, and you go back to Enron and WorldCom, that once accounting fraud, the allegations are made public, you have about 4 months until those companies announced their bankruptcy. Now, this month or next month would be about our 4-month mark. Okay, the end of this month, I think early January would be the 4-month mark. Now, who knows? General Electric is a huge company, is a household name. It used to be one of the bluest of the blue chip companies. They are part of the military-industrial complex with the amount of money that they were awarded by the federal government. It would not surprise me if General Electric is one of these companies that is causing some shockwaves behind the scenes. This is complete speculation. We're not going to know until these companies actually start to falter. They file bankruptcy. And then you're going to have to say, oh, now I get it. Now I see who the Federal Reserve was bailing out basically on a nightly, daily, weekly basis. I think it could be GE. They're probably part of the mix, but I think there's a lot of companies in the mix, to be perfectly honest with you. But I'm just saying, we don't forget here at the Capital News, and I just want to bring that back to the forefront because we're coming up on that 4-month mark, and anything could happen. And if GE goes down and or Boeing, that could be huge. Well, it will be. It will be huge if it does happen. I hope it doesn't because these are two huge U.S. manufacturing companies. And don't forget, GE manufactures engines for the airline industry. So this could be a double whammy. Just something to pay attention to. So now to our list of 2020 risks to the market for next year. I'll read off all 20, and then maybe we'll get through a couple here today, and we'll make our way through them throughout the rest of this year. Number 1, continued increase in wealth inequality, income inequality, and healthcare inequality. Number 2, Phase 1 trade deal remains unsigned. Continued uncertainty about what comes after Phase 1. Number 3, trade war uncertainty continues to weigh on corporate CapEx decisions, capital expenditure spending. Number 4, ongoing slow growth in Europe and Asia, triggering significant U.S. dollar appreciation. Number 5, impeachment uncertainty and possible government shutdown. Well, it appears that at least on this one, we have averted government shutdown. Okay, whatever. Number 6, U.S. election uncertainty, implications for taxes, regulation, and CapEx spending. Number 7, antitrust, privacy, and tech regulation. Number 8, foreigners lose appetite for U.S. credit and U.S. treasuries following presidential election. Number 9, MMT, that is modern monetary theory. We will talk about that. Style, fiscal expansion boosts growth significantly in the U.S. and or Europe. Number 10, U.S. government debt levels begin to matter for long rates. Number 11, mismatch between demand and supply in T-bills. Another repo market rate spike. Number 12, Fed reluctant to cut rates in an election year. Number 13, credit conditions tighten with more differentiation between CCC and BBB corporate credit. Number 14, credit conditions tighten with more differentiation between CCC and BBB consumer credit. So the difference between corporate credit and consumer credit for numbers 13 and 14. Number 15, fallen angels, more companies falling into BBB and out of BBB into high-yield debt. Number 16, more negative yielding debt sends global investors on renewed hunt for yield in U.S. credit. Number 17, declining corporate profits means fewer dollars available for buybacks. Number 18, shrinking global auto industry, a risk for global markets and economy. Number 19, house price crash in Australia, Canada, and Sweden. And finally, number 20, Brexit uncertainty persists. This sounds like what the Capital News talks about on a near daily basis. Again, this is the list from Deutsche Bank, 20 risks to the markets in 2020. This sounds like a lot of the same concerns and issues that we have been talking about through the entirety of 2019 as well. There is still a whole host of things that are unsigned or unfinished. Uncertainties abound. Here they are. Do we think that there's going to be completion to some of them in 2020? I would hope. Because they were not completed in 2019. Maybe they'll be completed in 2020. Maybe it will bring some certainty to some things. But is it going to be buy the rumor, sell the fact? Because once these things get signed, if they do, put to paper, inked, and you sign them, then you have something to look at. Although we don't know if that's going to take place with the U.S.-China trade deal phase 1. We don't know if it's going to be seen. We don't know. We do know some of it, at least, is going to be redacted for national security reasons. But we don't know with the rest of it. All we know is it's the best deal ever. So, number 1, continued increase in wealth inequality, income inequality, and healthcare inequality. So, I think a lot of this is going to continue to play out in 2020. There's no ifs, ands, or buts about it, especially with the Federal Reserve printing money like it's going out of style and Uncle Sam going on a debt binge again. We're already now predicted to have over a $1 trillion deficit. Okay? Fiscal conservatives, are you okay with this? You fine with Donald Trump signing off on all of this? Because he's the one that brokered the deal with the Democrats, patted himself on the back. We can find it in his Twitter feed. This was a great deal. This was a great deal. Fantastic that we now have trillion-dollar deficits. Let me tell you something, folks. If you took out the deficit spending, that $1 trillion, okay, and remember, we take in about $3 trillion, we spend $4 trillion. You can't make this crap up. If you took out the deficit spending, GDP growth would be at zero. Be at zero. Do you understand this? This means there's zero growth. None. Nada. If it was not for Uncle Sam, which is us, the taxpayer, if it wasn't for Uncle Sam going further and further into debt, we'd have zero growth. Be nothing. So how can anybody say with a straight face that this is the greatest economy ever in the history of the United States? Anybody you're listening to on CNBC, Fox Business, Bloomberg, if they do not explain this to you, they're doing a huge disservice, because this is basic arithmetic, people. It doesn't take that much to figure this out, okay? You don't have to be a mathematician. You don't have to be an economist. You don't have to be a financial market analyst. Just go look up the numbers. It's basic mathematics here, okay? Remove the deficit spending, and you got nada, zilch, nothing. No growth here in the United States. And of course, this is not generating a whole bunch of growth either, because we got to pay this crap back with interest. With interest. So nothing's free. There is no free lunch. So the only thing that's keeping us going is basically government intervention and a consumer who is just doing fantastically well because they're living paycheck to paycheck. They're using their credit cards to make ends meet, and of course they're paying record high interest rates on their credit cards, despite the fact that we have near record low interest rates. So solve that riddle. Everything just gets passed down so beautifully to the consumer, isn't it? Can't make this stuff up. But I do think that this is a crucial point that is going to continue to be played out throughout the entirety of 2020, and I imagine longer than that too, because look, wealth inequality, income inequality, and healthcare inequality. This is one of the main driving factors behind why we are witnessing global protests. And again, the only leaders on this planet, as far as I'm concerned, are the people who are protesting. That's it. They're not in Washington, D.C. They're not in the White House. They're not in the Federal Reserve. They're not in the Capitol building. They're not in Parliament. They're not at 10 Downing Street. They're not in the Chinese Communist Party. They're not in the Kremlin. They're not in Brussels. They're nowhere. They're in the streets of Chile, of Hong Kong, of Lebanon, of Iraq, of Peru, of Haiti, of Egypt, Algeria. The list goes on and on and on, and it will be coming to a theater near you in due time. The weakest links are the ones that are going to go down first. That makes sense. They are the weakest links. It takes less to break them. Okay? And this is not a good thing either, because, you have a little bit of a hike. Sometimes it's a bigger spike in their gas tax, their fuel tax, an increase in what it costs to ride a bus, an increase in what it takes to ride the subway. And people are done. They're hitting their breaking point. It will come here to the United States. The reason it takes a little bit longer to come here is because we are the largest economy in the world. Probably has something to do with the fact that most people are on some type of drug that softens the brain, whether that's an illegal drug or a legal one prescribed by a doctor that we all love. Could be that. And because we are addicted to credit card debt. We're over $1 trillion in credit card debt, by the way, just so you're aware. So we have these extra luxuries of being brain dead and having credit cards. Now, I'm sure if the rest of the world had access to these pharmaceuticals and illegal drugs to the degree that the United States does, and cheap credit, I'm sure they would be doing the same thing. Seems to be some type of human nature, but they don't, and that's why they are taking to the streets. And thank God, because hopefully they are a beacon of hope for the United States and some other developed countries to sort of wake up, snap out of it, because this cannot continue. Because I do not demonize wealth. I want everybody to be wealthy and successful. But when it's on the back of a printing press and when it's on the back of everyday men and women, because you're just destroying the budget, it's a $1 trillion deficit as far as the eye can see. And you have the Congressional Budget Office who is predicting, which we are as well, $1 trillion deficits as far as the eye can see. And in their projections, they don't predict recession. So if we go into recession, we're going to have $1.5 trillion, maybe even $2 trillion, depending on the severity of it. So, folks, the breaking point will come. It will come. I take no pleasure in saying this, but again, this is mathematics. And I personally would rather have it happen sooner rather than later, because the sooner it happens, the quicker we can resolve it, hopefully, with the right leadership. Hopefully we can learn from our mistakes finally and start to turn this ship around in the right direction and get things going. It's going to be a very long time, and it's going to be extremely difficult. I also think it needs to happen sooner rather than later, so that the people who are responsible for these policies are the ones who pay the biggest price. Because the further you kick this can down the road, the more people and the more generations who have absolutely nothing to do with this, or very little to do with this, are going to pay the bulk of the consequences, which I just think is immoral and flat out wrong. But unfortunately, the generations who have caused a lot of these issues are the ones in power. And who do you think they're going to look out for first? So, continued global protests on the back of wealth income inequality. Number 2, Phase 1 trade deal remains unsigned. Continued uncertainty about what comes after Phase 1. Well, we talk about this here all the time, so I'm not going to bore you with this. But again, we were told the same song and dance 2 months ago. Now, I know on some of those happy pills that many of you might be taking, you may have forgotten about this, but I don't forget here at the Capital News. So 2 months ago, we were told the same story. Supposed to be a signing ceremony. There wasn't. Now, we're told once again, there is a deal. There's going to be a signing ceremony in a few weeks. We'll see. Number 3, trade war uncertainty continues to weigh on corporate capital expenditure decisions. Folks, this has very little to do with it. Has very little to do with it. I don't care what the surveys say. If they come out and they say, oh, yeah, the trade uncertainty, it's a convenient scapegoat. It's a convenient scapegoat to say, yeah, things are just slow. This is what happens. This is the business cycle. We have multiple capital economics presentations on our website, The Capital News, and our YouTube channel, The Capital News as well. Check them out. We talk about the business cycle. The business cycle is not dead. Okay? This is not Donald Trump's fault. It wouldn't have been Barack Obama's fault. It is the business cycle. It is the market economy making its way through. That's it. You're overextended in debt. Now you got to tighten the purse strings. Common sense. Common sense. This is what happens. Okay? But when you have politicians who want to take responsibility for all the good things but want to blame people for the bad, well, guess what? I'm going to blame them for the bad too. That's what I'm going to do. Because I don't like it. Because I think it's idiotic policy for any president to take ownership of the economy. I get it, but it's stupidity as far as I'm concerned. And it's really stupid to take ownership of the stock market. But, you can do what you want. So again, number 3, trade war uncertainty continues to weigh on corporate capital expenditure decisions. The global economy was slowing down, folks, before the trade war even began. So this is just a continuation. It's all it is. And again, like I said here, we're waiting for the cash freight index. Again, that should come out this week. I'm hoping it does. And we'll continue to see if it is further deterioration, if it's starting to stagnate, or maybe there was an uptick. I'm open to anything. All I want is the truth, and we're going to do our proper analysis on it. But like I've been saying here for the past couple weeks, I put a lot of weight on the cash freight index, which is why we talk about it here. But I want to wait to see the first few reports of next year. Because if this deterioration or stagnation continues through the first quarter of 2020, then I'm going to say we're pretty damn close to a recession. Perhaps we might even be in one, depending on whether the data comes out in the interim. But that is going to have a lot of weight on my decision as to when we're likely to really start experiencing something. And it doesn't mean it has to be bad, but I think it's going to be, just simply because of all of the debt that has been thrown onto these markets, all of the cheap liquidity that has been thrown out into the marketplace. It's got to make its way somewhere. So I will wrap it up with the lists right there, and we'll continue with this and some other things tomorrow, unless, of course, there is some type of breaking news. But we're going to make our way through this like we did earlier this year, and I might even have to do a review of those 30 market risks for 2019 just to see what transpired, which ones are still on next year's radar. And, of course, Deutsche Bank kept themselves off the list for further deterioration and maybe even some type of bankruptcy of their own. So we'll wrap it up there. Please like, share, subscribe, get the word out, leave your comments. We do love hearing from you. Stay diversified, stay vigilant, and stay with the Capital News. I am Alex Karitis. Godspeed.